وإن شاء الله ما من بتكون خفيف اليوم جوزيت وبكون فيها فايدة. طيب
يلا.
خلينا جوزيت نتابع الشغلة اللي بدينا فيها، بس أنا وإنتي عشان بقي لي شغلتين لازم أنا أشرحهم لكم عشان الأمانة العلمية، وبعدين نستغل اليومين اللي جايين بس نحل أسئلة past exams يعني على البالانس شيت consolidation وعلى الcomprehensive income. طيب let me go back للإشي اللي that we stopped at last time. Yes, last time we were talking about the impairment of goodwill when the non-controlling interest is measured using the proportionate share of net assets of the subsidiary. Now let's do the calculation of a goodwill impairment when the non-controlling interest is measured under the fair value model. Alpha, a parent with a subsidiary, is preparing the consolidated financial statements, etc. on September 30, 2022. So this is the reporting date. Alpha purchased 80% of the equity shares in Beta, and the consideration was as follows. So there is a share exchange, 32 million shares to the shareholders of Beta. The market price of Alpha's share is 2.5. Alpha agreed to make an additional payment of 30 million on September 1, 2023. So we have here a deferred consideration as well. Part of the consideration is the deferred that will be due after احنا عم نحكي 21, 22, 23, 3 years. Okay. Reaching this is contingent consideration actually. This contingent consideration will be paid on September 30, 2023 when the profit reach specific level. And the fair value of the contingent consideration is 20 million on October 1st. They debited 20 million to the cost of investment, fine. They reassessed the contingent consideration later on September 30, 2022, which is the reporting date, and the fair value was 22 million. Okay, so we covered this situation where there is a contingent consideration, so we'll do it inshallah in no time. But let me continue. Alpha incurred incremental legal and professional fees of 1.5. 500 of those fees relate to the cost of issuing the shares. And as we agreed, Josette, this 500 is a reduction in the equity of Alpha. The directors of Alpha carried out the fair value exercise on the acquisition date. Okay, the equity of Beta as shown in its own financial statements was 88 million. The fair values of the net assets of Beta were the same, with the exception of we have property and equipment that has a carrying amount of 80 but fair value of 84. So we have 4 million surplus that is going to be depreciated over 2 years. Intangible assets, which should be initially recognized and measured at 6 million. Okay, what else? Inventory had a book value of 3 million and a fair value of 3.2. All the inventory was sold in the year ended December 30, 2022. So by this date, the inventory value is going to be 0. As we know, the fair value adjustments are temporary differences that will attract 25% income tax. The policy for the non-controlling interest is to measure at fair value. Okay. The estimated fair value of non-controlling interest, it's provided to us. Sometimes they provide us with the market share of Beta shares. Other times they give you the market value of the non-controlling interest at acquisition date. On September 30, the directors of Alpha reviewed the goodwill and measured the recoverable amount. They considered Beta as one cash generating unit, and the recoverable amount is 118. Also, they say here, Beta paid a dividend of 10 million to its equity shareholders. The individual's financial comprehensive income of Beta showed 16.1 million of profit for the year ended September 30, 2022. So the acquisition date is October 21. So we are talking about 1 year since acquisition. Right. Let's start with the basics, Josette, as we used to do. So I'll copy what we covered last time and just paste and see how the calculation will look like. Okay, let me go down here. Okay, initial measurement of the investment. So it's share exchange and contingent consideration. So here I'll write down share exchange. Share exchange. How many shares were issued by Alpha? Purchased 80%, 32 million shares, 2.5 per share. So it's 32 million times 2.5. 32 million times 2.5. So we are talking about 80 million, not deferred consideration. We are talking about contingent consideration. The value of the contingent consideration at acquisition was what? Was 20 million. And then it was reassessed after 1 year at 22 million. So we are talking about 20 million here. Are you following me, Josette?
Yes, I'm with you.
Mumtaz. Okay, total consideration is 100. Transaction cost, as we said, we have 1.5 million. 500 is the cost of issuing shares, and 1 million is the transaction cost. So we can write down here. Transaction cost is 1 million. Cost of issuing shares, which is reduction in equity as per IAS 32. As per IAS 32. And let me close the bracket. Open bracket. Okay, 500,000. Great. Journal entry on October 1st, 2021. The acquisition date, debit investment for 100 million. Transaction cost that will hit the P&L, we are talking about 1,000. Also, we should write down here equity shares issue cost. We will debit the equity by 500. Okay, we will credit cash by 1 million, which is the transaction cost. Credit, طبعا credit capital. وزي ما تعودنا, as we used to do, Josette, normally
Premium
the
capital.
par value per share is $1. So we will credit additional paid in capital. And also we have to credit contingent provision. Okay, for the capital, we are gonna credit capital by 32 million times 1, because normally it's $1.
$1.
Yes, the difference, 32 million times 2.5 minus 1 times 2.5 minus 1. This is the additional paid and capital. Contingent consideration is 20 million. So this is the total credit, 101. The total debit, 101, 500. Am I right? 101. Where's the 500? Debit equity. Yes, credit cash 1.5 equals the cash. We paid 1,500,000. Okay. So this is the entry. Moving on, Josette. So the journal entry would be, this will help us in the consolidation and to understand how to eliminate the investment in subsidiary. So basically debit finance cost. By the end of the year, we will increase the contingent provision by 2 million. So journal entry on 30 September 2022, after 1 year. We will credit the contingent liability by 2 million, debit, not finance cost, P&L. Call it whatever you want. I have no issue about this. So this is to account for the increase in the contingent consideration. According to the question, it was reassessed at 22 million by the end of the year. Okay, moving on, Josette. No journal entries. These are the balances. Okay, let me balances on September 30, 2022. The reporting date. Investment is as is. Contingent provision is gonna be what? 20 million plus 2 million. So we are talking about 22 million. Okay, let's move on and analyze the net assets of Beta at acquisition, which took place on October 1st, 2021. What did they say about this? The equity of Beta, as shown in its own financial statements, was 88 million on October 1st, 2020. So here they are making our life easy. So we can write down here equity without those lines. Net assets of Beta is 88 million. It's already given, 88 million. Type. What are the fair value adjustments? We have P&E with 4 million revaluation surplus. P&E revaluation surplus. We are talking about 4 million. Also, we have intangible asset. Intangible asset. What 6 million intangible asset. So it equals 6 minus 0. It was not recognized, so it's 6 million. So the net assets carried at fair value, net assets of Beta carried at fair value, we are talking about 98 million. Are you following me, Josette? Are we okay with this so far?
Yes, yes.
Okay, great. So the net assets of Beta at reporting date, which is 30 September 2022. What did they say here? What information did they provide us with? We forget about the inventory, by the way, Josette. Here we have also inventory.
For the adjustment.
Yes, inventory valuation equals 3,200 minus 3,000. So we are talking about 200,000. Let me make the summation again. So we are talking about 98.2. Okay. But what else did they provide us? The fair value, the policy to measure the non-controlling interest is fair value. Reviewed the goodwill. Okay. On March, they measured recoverable amount. Okay. On March 22, Beta paid dividends of 10 million. And also they provided us with the profit for the year, 16.1. So I can calculate the equity or net assets of Beta at the reporting date. We have the equity at acquisition. It's already provided to us, Josette, 88 million. We will add to it profit for the year to 30 September 2022. How much profit? 16.1. Let me just double check the number. It's 16
yes,
million
yes,
point one.
16.1.
And don't forget about what? The dividends.
dividend.
They paid dividends. Yes. So we
have
will
to
say
deduct
here.
this amount?
Yes, definitely. Because it's a reduction in retained earning. Dividends paid by Beta. How much dividends paid by Beta? It's 10 million. So here we will deduct. It's like we are calculating the equity at the
Reporting date.
Beta before, Josette, before the fair value adjustments. So let's calculate at carrying amount or at book value. The amount should be 94 million point one. This is the net assets at carrying amount. So let's now talk about the fair value adjustments. We have 3 fair value adjustments here. Let me copy them and paste. Okay. But the first one, they said that it will be depreciated over what? 2 years.
2 years.
So the remaining amount of property and equipment revaluation surplus equals what we recognized, which is the 4 million times what, Josette? 1 over
2.
برافو عليك. So it equals, خلينا نكتبها هون, 4 million times 1 over 2. Okay. Intangible assets. What did they say about the intangible assets? 6 million here. The useful life, 18 months.
18 months.
Okay. So basically equals this number, which is the 6 million, times 6 over 18.
Yes.
This is the remaining, because 12 months collapsed or passed away. So the remaining is 6 months of the 18. So we are talking about 2 million. What about the inventory? It was fully sold. So this minus 200 and the amount should be 0. Why? Because they said here, all the inventory was sold in the year ended September 30, 2022. So the valuation is already reflected in the statement of comprehensive income. So the valuation itself has a 0 balance by the year end. So net assets measured at fair value is what? 98.1. هلا, we keep forgetting things, يا Josette. What did we forget here? حلو انه ننسى عشان ما ننسى هلا عشان ما ننسى في الاكزام. So what did we forget? Always remember tax, income tax, Josette. حكوا لنا we have income tax, they are subject to income tax 25%. So this makes us recognize a deferred tax liability, which equals what? Equals, open a bracket, the P&E revaluation plus
6,000
intangible
plus
asset plus
100.
inventory times
0.25.
طبعا هذا بده يكون, it should be a negative number.
Minus. Yes.
Okay. So let me see here. Okay. This is the number. Also here we have the deferred tax liability. Equals this one plus this one plus this one, close bracket, times 25%, and it should be a negative number because we are talking about a liability. And let's do the calculation. So we have here 97.1, and here at acquisition it was 95.65. Okay, so change equals the difference between 97.1 and 95.65. Initial measurement of non-controlling interest using what? Not proportionate, using the fair value method.
Okay.
It's already given to us. They estimated the fair value of non-controlling interest of 20 million. Okay, 20 million. طيب جميل. This is the 20 million. Let me move it here. 20 million. Okay. As we used to do, measurement of goodwill. Consideration paid
Cost of acquisition.
by Alpha. Okay, by Alpha. It's the 100 million. Hi, total consideration 100 million. Okay. Value of non-controlling interest. This is the 20 million. Total 120. Fair value of Beta's net assets at acquisition, which is the 95 million. So we are talking about a goodwill of how much? 24,350. Belongs to whom? Belongs to the parent, and here to the parent and non-controlling interest.
Yes, because it's at fair value.
Because we are using the fair value model or method. Okay. Fine. Let me now, we are ready to carry out the testing of impairment. طيب ما في عندي هنا notional. I don't have here notional and why? Because goodwill belongs to both. So you don't need to calculate, Josette, the notional goodwill, which is the goodwill at the 100% shareholding level. We already talking about 100% shareholding level. You get my point, Josette?
Yes, yes, for the last session.
Yes, that's why we do not need to gross up goodwill here.
صح.
Goodwill is already grossed up because it belongs to both non-controlling interest and the parent, which represents the 100% of Beta. So no need to gross up. We will here start with the impairment of good net assets of Beta without goodwill at reporting. We already calculated that.
Yes.
97 million, right? Am I right? This is the 97 million.1. Net assets of Beta without goodwill. Type, let's add the goodwill. Add, not the notional, add goodwill without any further explanations. This goodwill belongs to both. Type, how much goodwill do we have?
24,
we already calculated that. Goodwill, 24,350. So the net assets with goodwill equals what? 121,450. You see, simpler, the way of testing the impairment here, simpler. Recoverable amount. How much recoverable amount did they determine? Recoverable amount is 118, according to the question. So we will take the 118.
So نحن هلا we are doing all this calculation because they didn't give us the impairment value. We are calculating the impairment, right?
Exactly, exactly.
If you already بيعطونا إياها.
يا عيني عليك جوزيت. If they want to make our life easier, they will provide you with the impairment directly. So you do your calculation. But when they provide you with the recoverable amount, they want you to carry out the testing. They want to see the goodwill impairment testing in your exam paper. This is what they are aiming at. So, and we are showing them this. So the net assets is 121, but the recoverable amount is 118. So it seems our net assets are overstated. We have to push them down. That's why we need to recognize impairment loss of 3,000 or 3,000,045. No need for this note. Okay.
And now we have to divide this value between parent and PCI.
Yes. So I can say here impairment loss absorbed by the parent or hitting the parent, and impairment loss hitting the non-controlling interest. because it is shared by the NCI. So basically, the impairment loss for the parent equals this number times what? 80% of the shareholding.
80%.
Yes. And this equals this times 20% their shareholding. اوكي.
إذا بدي أعمل أنا هيدا الإكزرسيس مثل السيشن اللي قبل يلي هي كانت بس على البارنت إذا كانت proportionate منوقف
بالضبط.
لحديت ما نعمل ال difference between 118 121 بيطلع لي 3450 right؟ برجع بعمل هيدي الفاليو times 100 divided by حتى أجيب الفل من هون.
قصدك على الميثود الاولانيه اللي proportionate؟
على النوشن الجروس.
بالضبط. اذا بتلاحظي هاي بتطلع معاكي الامبيرمنت لوس at 100% شير هولدنج ليفل، انت بدك اياها على الليفل تبع البيرنت، فانت you multiply this by the 80% under method number 1. شوفي هالميثود هنا بس عشان just to remind you. لحظه جزات. We did the exercise. Net acquisition beta without goodwill. With goodwill. هنا عملنا gross up. لحظة. هنا عملنا gross up. فبالتالي when we continue.
نحن عملنا الجروس up على الجودويل حتى طلع معي.
عليكي. You see here we added full notional goodwill grossed up. فبالتالي الريزلت الامبيرمنت اللي راح تطلع منك على مستوى الجروس اب. I don't need this. I need it على مستوى البيرنت only. So I have to multiply this by 80%.
Thank you.
Or whatever shareholding. وضحت الصورة جوزات؟
clear. Thank you.
Okay, you're welcome. طيب, what else do we have؟ هلا measurement of goodwill. Same numbers زي ما حكينا هون. Fair value. Okay, this is the goodwill. Impairment loss equals this amount which we already calculated.
276.
Yes, and this is the goodwill at reporting date. This is the goodwill that is going to appear in the consolidated statement of
برجع باخد الامبيرمنت فول، ما برجع باخد بس تبع بارتية البارنت.
Let's think together جوزيت عشان ما نحفظ. انا ما بحب حدا يحفظ، انا بحب نكون فاهمين. هلا جوزيت you are preparing ايش؟ consolidated statement of financial position صح؟
Yes.
هذه اللي هي لكلنا البيرنت and non-controlling interest. الدليل non-controlling interest are appearing in the statement, consolidated statement of financial position. So when you are talking about the goodwill in the balance sheet, it's the goodwill for everybody.
For both. Okay.
Yes. لأنه both are appearing. The parent and the NCI are appearing or recognized في هذه consolidated statement of financial position.
Okay, clear.
When we consolidate, we do not only consolidate for the parent. If you remember the consolidation, we take all assets plus all assets, liabilities. We do not consolidate based on the parent's shareholding. We take full, and we set aside اللي هن ال NCIs في ال equity, consolidated equity. Are we clear about this, Josette?
Yes.
Okay, ممتاز. الشيء اللي قبل الأخير اللي إحنا نحكي فيه شغلة بسيطة جدا جوزيت. It talks about the intra-group transactions between the parent and subsidiary. As I explained before, Josette, there are two types of transactions. One is downstream and the other is upstream. Downstream, when the direction goes from the parent to the subsidiary, downstream. Upstream, from the subsidiary to the parent. Does it make a difference? In the technique itself, there is no difference in the technique how to calculate the unrealized profit. However, when you consolidate, you need to know whether this is a downstream or upstream transaction. Why? Because let's think together, Josette. If the parent is selling the goods to the subsidiary and there is unrealized profit, this unrealized profit should be eliminated by the parent. Why? Because the parent is the seller. يعني it will reduce their retained earnings. You agree with me on this, Josette?
Yes.
Why? Because they are the seller. They originally recognize the profit. But what if the subsidiary is the seller? In this case, the NCI should eliminate the unrealized profit from their earnings. Why? Because those are the sellers to the parent. So this is the difference that we have to pay attention to. يعني when the subsidiary is the seller, we will adjust the non-controlling interest, yes, with the impact of the unrecognized or unrealized profit. So let's go through this example. Alpha, a parent with a subsidiary, is preparing the consolidated statement of, or their consolidated statements on September 30, 2018. On October 1st, 2011, Alpha acquired 120 million of the total 160. So what is the shareholding here, Josette? 120 divided by 160. So we are talking about 75%. Thank you so much. Type and gain control. The acquisition was financed by a cash payment of 144 on October 1st and a further cash payment of 145 to the former shareholders of Beta paid on October 1st, 2013. يعني هذا deferred consideration.
Not contingent, yeah.
Yes, and they provided you with the discount rate. They provided you with the discount factor 826, so you can calculate the present value. Alpha incurred due diligence cost of 1 million relating to the acquisition on October 1st, and on September 30, 2018, the individual financial statements of Beta showed retained earnings of 80 million and 200 million respectively. So these are the retained earnings to enable us calculate the net assets at acquisition and at reporting. Also, they say on September 30, 2018, which is the reporting date, the individual financial statements of Alpha showed retained earnings of 693 million. Okay. The directors of Alpha carried out the fair value exercise with and find the following differences. We have a property has a book value of 120, fair value of 160. طبعا it has two components, land component and estimated, yes, and the buildings component. When they say property, they refer to land and buildings. The land component of the 120 is only 40 million. The fair value is 160. The land component of the 160 is 60 million. Why they are providing us with this information? Because we know that land is not subject to depreciation. We will only depreciate what? The buildings. The buildings have 40 million useful useful life. But plant and equipment having a carrying amount of 120, fair value of 130. The estimated remaining useful life is 2 years. Fine. In the consolidated statements, the fair value adjustments will be regarded as temporary differences. So the income tax rate is 20% here. On October 1st, 2011, acquisition date, the directors initially measured the non-controlling interest using the fair value method. On October 1st, 2011, the fair value of the equity share in Beta was what? 1.7. So this will enable us calculate or measure the fair value of non-controlling interest at acquisition. Since acquisition, the goodwill has been what? Impaired by 10 million. You see here, Josette, they provide
us with the
figures. يعني shortcut. Yeah. Okay. Alpha supplies a component to Beta at a markup of 25% on the production cost. You see, they have two scenarios, Josette, here. Either they provide you with a percentage of يعني gross profit percentage, which is percentage of revenue, or they provide you with a percentage as a markup of cost. الكالكوليشن تختلف. If it is markup of cost, we will see how we do the calculation. If it is gross profit margin, على طول بعرف إنه this percentage is percentage of revenue, of sales revenue, which is straightforward. I can calculate the profit by multiplying this by the sales value. So the 25%, if it was the gross margin percentage, simply the profit is 25% of sales revenue, full stop. But when they say 25% markup on cost, we have to do special calculation here to reach to the profit from sales.
How we do it?
We will do it together now.
Okay.
No worries, Jose. هلا we will work it out together. On September 3rd, who's the seller and who's the buyer? Alpha supplies. So we are talking about downstream transaction. Okay. On 30 September 2018, the inventories of beta included 15 million in respect of component purchase from Alpha. هلا 15 million of goods purchased from Alpha. Those 15 million will
include the profit.
Yes, include a profit which is unrealized. Why? Because the parent or the one unit, the one entity concept, the entity cannot sell and make profit from its own sales. So that's why we have to eliminate those unrealized profits. Okay. And the deferred tax rate here is 20%. Okay. Right. Let's do the calculation as we used to. Let me copy initial. What I like about those examples that we are working out the example and reviewing what already covered. It's like cumulative, Josette. So
Yes.
every time we are repeating what we learned, which makes. But I will skip the impairment of goodwill and I will copy everything else. Right. Let me put. Okay. Initial measurement of investment in the subsidiary on acquisition date. The acquisition date was, I think it was October 1st, 2011. Yeah, October 1st, 2011.
Okay.
2011. Reporting date, Josette, is 30 September 2018. So we are talking about 7 or 8 years since acquisition. So it doesn't make a difference because what I'm concerned.
إذا شيء ما عندهم تايم محدد حتى يكون في عندنا ريبورتينج.
At least is 1 year unless it is mid year كذا. والماكسيمم could be 10 years, 11 years, 20 years, 5 years, whatever.
أنا فهمتها إنه هي maximum within 1 year.
لا أنا شو بيهمني جوزيت؟ أنا بيهمني to measure non-control and to measure net assets of beta at acquisition and net assets at reporting. هلا بينهم 10 سنوات ولا بينهم 5 سنوات is not make any change in my calculation. Okay. So consideration paid by Alpha.
We have cash consideration.
Okay, financed by a cash payment of 144. Let's put here 144 million. This is the 144 million. Yes. Also, they have deferred consideration. How much is the deferred consideration?
بدنا نعمل لها a discount price.
A further payment of 145.2.
145.2.
Okay, so here equals 145.2 times 0.8 something. هلا برجع بتأكد من الرقم. 0.826.
0826.
26 ولا 62?
26.
Okay. 0.826. Okay.
Yes.
So we are talking about here طالما انها مليون فهي
حتى 1000 لانه already اللي فوق عاملينها باي.
هي 119,935. So total consideration paid by Alpha. This is the total. Transaction cost. Do we have any transaction cost?
Yes, we have, as I remember.
Yes, they incurred 1 million.
1 million due diligence cost.
Okay, هذه 1 million here. So entry, journal entry on
It's investment
October 1st, 2011.
Cash,
investment 263,935. Transaction cost, it's 1 million.
The entry is correct.
Cash, okay. So total debit equals total credit. So this is the entry, and here financial liability, which is the deferred consideration. Also, هلا journal entry by Alpha on في نهاية السنة الأولى, and this will repeat.
ايه بناخد finance cost تبع ال deferred consideration.
This is this. Yes, 2012.
Yes, I remember.
So basically we are talking about this times 10%. أيوة. So this amount times the 10%. This will repeat every year until due date. مش due date. في أخطاء طباعية.
It's okay.
No problem. طيب. Okay. Let me delete this one because we said no, the other one will repeat, and we know the mechanism. Every time we add the interest to the financial liability and then multiply by 10%. Next year, add the interest to the financial liability and then times 10% and so forth. But it's not, should not be a big deal. Let me also take this out. Okay. So the balance is by September 30, 2012, first year, for example, these are the balances, and this is the financial liability, which was 119 plus the interest, which is 11, and so forth. This is, for us, is new. But let's move to the next step, Josette. Net assets at acquisition, net assets at reporting. Acquisition was October 1st, 2011. Okay.
Capital.
Let's see. What did they say? Capital, we can calculate capital, right? Alpha acquired 120 of the total 160 million, $1 shares in beta. So the capital is 160 million. Capital 160 million. هاي ال 160 million. طيب retained earnings كم أعطيتونا retained earnings يا جماعة؟
80.
Yes. هاي should retain 80 and 200. 80 acquisition, 200 reporting. 80. So we are talking about 240 carried at type. Now we will put the details. Fair value exercise. We have a property which comprises what, Josette? Comprises land and buildings. When we say property, it refers to land and buildings. Type.
Yes, we have to.
Carrying amount is 120.
Okay.
طيب. 40 million out of 20 is the land, and here 60 million out of 160 is the land. So basically, we have revaluation surplus on land by 20. Thank you so much. Yes. So first item I will write down land revaluation surplus 20 million. This is the first one. Type. What else do we have? Type here.
Other plant.
20 million relates to the land. The total is 40 million. You see here the difference between 160 and 120 is 40 million, Josette. 20 million out of this difference relates to the land. So 20 million relates to the buildings. Are you following me here, Josette?
اوكي. بدنا نحطهم اثنيناتهم. انا فكرت
لازم.
بس اللاند ما عندها depreciation. انا دغري رحت.
يا عيني عليك. So we have another revaluation surplus.
اوكي، يعني عندنا اثنين revaluation بس وحده منهم عليها depreciation.
Here we will say property or buildings. خلينا اسميها buildings.
اوكي.
Revaluation surplus another 20 million. ليش أنا فصلتهم؟ Because one is subject to depreciation, the other is non-depreciable asset.
Yes.
But what else do we have? We have plant and equipment.
Another plant.
With a 10 million valuation surplus. Yes, plant and equipment. Plant and equipment revaluation surplus. We have here what? 10 million. Okay, now I'm ready not to forget. I'm ready not to forget what? Deferred tax liability.
20%.
20%, which equals 20%.
20 plus 20 plus 10.
Yes, 20 plus 20 plus 10. And don't forget that this is the liability, so it should minus be negative number. Okay. So let's make the summation now. I'm sorry. Let's make the summation.
Okay.
So it's 240 plus 20 plus 20 plus 10 minus 10. So we are talking about 280 net assets carried at fair value.
Okay.
Okay, what about the net assets at reporting date? Reporting date is September 30, 2018.
18.
Okay. Let me take this and just move it down. Okay. But net assets, again, capital, no change.
Yes.
We did not mention any information about changing capital. Type, let's check retained earnings.
100, I think, as I remember.
Bravo عليك. 80 and 200.
لا 200.
Okay. So retained earnings we have. Okay. Net assets carried at carrying amount or book value. Okay. But now we will take the, yes. I will copy those. Put them down there. Okay. So 20 million. Stay as is. Why? Because this is not subject to depreciation. صح. 20 million الثاني شو قالوا لنا over how long we should depreciate? The buildings have 40 years useful life. 40 years. So
already قطع 8.
يا عين عليك. 8 اكيد احنا بنقول اكتوبر 2011 12 هاي سنه 13 14 15 16 17 18 7 years.
7 years.
صح ولا انا غلطان؟
Yes. 7 years من ال 11 صح.
Okay, 7 years. So basically it's 20 million times قطع 7 years collapse. So the remaining is what? 33.
صح 33.
33 divided by 40. So 16.5 million. Okay. What about the property and equipment or plant and equipment revaluation surplus? Let's see how long or what's the useful life. 2 years. ممتاز. So basically we are talking about what? 10 million minus 10 million. It should be 0. Do you agree with me on this, Jose?
Yes.
Because the useful life is 2 million. We are talking about 7 years collapsed. So basically it was fully depreciated 5 years ago. It has a value of 0. That's why I told you, Jose, regardless whether it is 2 years since acquisition, 1 year, or even 10 years or 20 years, I don't care. I can still calculate the net assets at reporting date. Okay, deferred tax liability equals minus 20% times.
It's only على 16.
So 20 plus 16 plus 0.
ليش رجعنا عملنا ديفر تاكس على ال 20 على البيلدينج على اللاند؟
طبعا ما هي it created a liability, deferred liability, Joseph. This liability is not affected. امتى هذا بتحول? It will materialize when you sell the land. Land is not depreciated. So the liability for the land will stay as is over those years unless you made another revaluation for the land.
So بضل ادفع عليها ديفر تاكس؟
Yes. بس ما تغير. هو شو اخذنا احنا؟ deferred tax. Let's calculate 20% times 20 قديش عندي؟ 4 million, right? So the liability for the land was 4 million at acquisition and it is still 4 million at reporting. So there is no change, يعني no extra tax. It's the same. It's the liability. This will materialize or change if the land is subject to another revaluation or if the land is disposed of. ساعتها هذا deferred tax liability راح يختلف أو راح it will be derecognized. But the land, as long as the land stays as is, no depreciation, the liability will follow and it will stay as is and no change in the liability.
Okay, clear. Thank you.
You have to include it here as well.
Okay.
So basically, net assets $389.2. This is the net assets at reporting. Change in the net assets equals the difference between 280 and 389. So هذه الكالculation we know. And the initial measurement of non-controlling interest, according to the question, they said that the market price per share of beta is 1.7. How many shares are there owned by the NCI?
Okay, 160 times 0.25 times 1.7.
Is it 160 ولا the difference between 120 and 160?
لا أنا مش عم نعمل ال NCI قد إيه ال NCI value.
NCI. طيب ال NCI قديش الشير هولدنج عندهم؟
إيه ما بدي
ألفا
آخد
acquired.
ما بدي آخد تبع بيتا.
Yes. Alpha acquired 120 million shares out of what?
Yes. Of
160. So we are talking about 40 million shares that belong to NCI, if you agree with me, Josette. Right?
Okay.
So 40 million. ليش؟ لأنه ال 160 million shares in beta, 120 belongs to parent, 40 belongs to NCI. Make sense?
Yes,
Yes.
160 times 0.25. It's remain the same. 40.
So, yes. So we are talking about 40 million shares times 1.7. Okay. 40 million shares equals 40 million times 1.7. So we are talking about 68 million non-controlling interest at acquisition date. طيب, am I ready to do the calculation for goodwill? Can we do that?
Yes.
طبعا.
Can...
بسهولة. We have no problem about this. Let me take this down a little bit. Okay. Measurement of goodwill. Let me take this one. Go here. Measurement of goodwill. Okay. Consideration paid by Alpha equals. Let's go up and see what is the total consideration paid by Alpha. It's 263,935.
95.
Value of non-controlling interest.
68.
Total is 331. Okay, fair value of beta's net assets at acquisition. This is the number. 280. So goodwill at acquisition equals what?
Okay.
51,935 belongs to whom? Belongs to the parent and NCI.
And the NCI.
دائما بذكر نفسي عشان later on if we have goodwill. هنا أعطونا شيء على الامبيرمنت. Did they provide
أعطونا
us?
الامبيرمنت.
How much do we have? 10 million impairment. So I can say here impairment of goodwill $10 million. So goodwill at reporting. This is the goodwill that will appear in the consolidated statement of financial position at reporting. $41,935. Right. Well, impairment, I can allocate allocation of impairment loss.
Yes, 10,000 times 0.75 for the parent and the remaining
so
for the
much.
NCI.
Parent and NCI. Okay. The parent equals 75% times
10,000.
And this equals 25% times 10. Okay, ممتاز. But now let's talk about the intra-group transaction here. Intra-group. Alpha supplies a component to beta. at a markup of 25% on its production cost. Beta still has 15 million value of inventory that was originally purchased from whom? From Alpha.
From Alpha to Beta.
شوفي كيف احنا how do we deal with this situation? Here
have
let
to
me
remove
say
the 25% profit from the 15 million.
يا عين عليكي intra group
وما ننسى الديفر تاكس.
ما ننسى الديفر تاكس. برافو عليكي جوزيف. طيب أنا I would do the following. Sales or inventory sold to Beta. I have the 15 million.
Yes.
Okay. طيب هلا ال 15 million it includes unrealized profit. This is what we agreed on, Josette, right? طب how
Right.
to calculate the unrealized profit? The policy for Alpha is to sell the inventory at 25% markup on the cost. يعني
Additional 25.
selling price to Alpha equals cost plus 25% cost. أنا بترجم I'm just translating what they are saying here. معناته selling price to Alpha equals what? 1.25% cost, if you agree with me. Does this make sense?
Yes, yes, exactly.
طيب, this is the selling price. طيب, how to calculate the cost? Equals selling or sales value times or divided by 125%. Are you following me? Or
Yes,
1.25? Okay.
It's math.
Then basically, if I take this down, inventory sold to Beta, 15 million. Can you calculate its cost of sales to Alpha? Sales value is 15 million. The cost equals what? 15 million divided by 125%. So it equals 15 divided by 1.25. So this is the cost of sales to Alpha, which means what? Which means we have profit of how much?
Times 0.2.
Profit to Alpha. This is how much profit Alpha recognized. Profit to
3,000.
the difference between 15 and 12. So we are talking about 3 million.
بالمليون نحن.
Yes. So this is the unrealized profit on the unsold inventory by Beta, which is the 15 million to Beta. This is how I calculate it. هلا, if they told you that Alpha recognizes or Alpha earns 25% gross profit on its sales to Beta, so basically, how do we calculate the profit in this case, Josette? We will take the 25% times 15. We will multiply 25% times what? 15 million.
In case قالوا at cost?
In case حكوا Alpha earns 25% margin or profit on its sales to Beta.
ما قالوا markup.
قالوا هنا 25% markup on the cost.
On the cost.
Markup on the cost, I have to do this analysis.
Okay.
So basically, you are dividing by 1 point the percentage of over cost, اللي هي 1.25. But if it is gross margin recognized by Alpha straight ahead, so we will multiply 25% times the sales value. فبيطلع عندي أنا البروفيت 3,750 or 3,000,000.75. Does this make sense? Fine.
Yes, clear.
طيب ممتاز. هلا نشوف let's see. طبعا this is the profit to alpha. Let me say here حتى أكون دقيق أنا. Before tax. So the profit to alpha after tax. Remember, there is 20%
Yes,
tax
deferred tax
or income tax equals this times
times
1 minus 20%. So this is the after tax. 2.4. But let's see how this will affect the consolidation, Josette. Now we will calculate something so-called retained earnings in the consolidated statement of financial position at 30 September 2018 اللي هو reporting date. How this will hit or affect the retained earnings or the consolidated retained earnings? Let's analyze together the consolidated retained earnings. هلا, as you will see inshallah Josette in the next two classes, when we consolidate the statement of financial position, this is a very important step that you have to have in your workings, اللي هي consolidated retained earnings, the number that will appear in the consolidated statement of financial position. It's very simple how to work it out. Let's follow those steps. To determine the consolidated retained earnings, the retained earnings for the whole parent and subsidiaries, we will start with the retained earnings of alpha at reporting date. This is our starting point. Always, when you say, Joseph, consolidated retained earnings, first step is to start with the retained earnings of the parent, because it's part of the consolidated retained earnings, definitely. So retained earnings of the parent equals what? Let's go back to the question here. Okay. Where is the number? And I went through the number here. On September 30, 2018, the individual financial statements of Alpha showed a retained earnings of what? 693 million. Okay, 693. Are you okay with this so far, Josette?
Yes.
Fine. This is the retained earnings of Alpha. Fine. Also, Alpha has a share in what? Alpha's share in Beta's or change
acquisition
is, thank you so much, in change of Beta's net assets since acquisition. We have to show their share. Alpha, the parent, they have a share. Their share equals 75%, right? Times what? Change in net assets. Did we calculate the change in net assets? We already did that. You see here?
Yes.
75% of this change in net asset belongs to the parent. So we will add it to their retained earnings because it's their right. Fine. What else? Alpha's share of goodwill.
Impairment.
Yes, thank you. Impairment loss, which equals what? We already calculated this.
7.
Yes, برافو عليك. طبعا نيجاتيف لانها it's a loss.
ايه صح.
هلا شوفي التريك. Unrealized profit on
تبع الانفنتوري تبع
yes downstream sales on downstream sales.
الفاليو اللي بتكون بلا الديفير تاكس اللي هي ال 3000
after
رايت؟
deferred tax. هاي 2.4
مع الديفير تاكس. ايه اوكي.
لازم. ليه؟ لانك
retained earning هيدا ايه مزبوط. بس
اول شيء
سؤال
retained
انا
earnings،
ايام
وبعدين هذا الرقم اللي حسبناه اللي هو التشينج in net assets of beta. لاحظ ال
retained
109
earnings
هذه
يعني هذا
جزء،
it's a
هذه
stupid
already after
sorry.
deferred tax. لاحظ الرقم نت، فما بنفع نضيف رقم gross to the net. لكن please pay attention here جوزيت. هلا when you adjust the retained earnings you take the 2.4. You are okay with this right جوزيت؟
yes.
لكن جوزيت when we consolidate inventory of alpha with inventory of beta
ايه ساعتها ما بناخد ال deferred tax because it's an inventory.
we will take the 3 million because this is how much overstatement on the inventory. I'm not talking about P&L. I'm talking about an asset. The asset of beta is overstated by 3 million. هذه should be eliminated in full. So we will eliminate the 3 million in the consolidated statement of financial position. I believe this is the consolidated retained earnings. So we will add up. But let's see what would be the non-controlling interest at reporting date.
Non-controlling interest.
NCI in the consolidated statement of financial position at September 30, 2018, reporting date. I will start with what?
already حسبناه. It's the NCI already calculated or given. هو لا نحن we had calculated.
Now we calculated the initial measurement of NCI. If you remember here.
1.7.
يا عيني عليكي بالضبط. It was the fair value. هي 68. And they have share of what?
Share of post acquisition.
يا عيني عليكي. ما بنسميهم الفز، بنسميهم NCIs. Share in change of beta's assets, which equals what? Equals 25% times change in beta's net assets since acquisition. هي ال 109. What else?
Impairment.
Impairment of goodwill. NCI's share. Why? Because we are using
fair value.
The fair value method. So we already calculated this. طيب, do we deduct any unrealized profit on downstream transaction or sales? No. Why? Because this is a downstream transaction. Alpha is selling the goods to beta, not vice versa. So basically, this is the NCI, consolidated NCI or NCI in the consolidated statement of financial position. Does this make sense?
Yes. In case كانت بتا هي اللي عم بتبيع للبارنت،
حاضر.
كانت الادجستمنت رح تكون هون بهاي البارتي.
ما هي انا حاططها في السؤال. لحظه هون شو بقول لك. افترض under the following scenario that the sales transaction is upstream. طب let's assume انها upstream. Beta is selling the goods to alpha. طيب هلا up to this point the calculations are the same up to this point. Why? Because this 15 million is not gonna be inventory sold to beta, it's the inventory sold to alpha, but I will change the names بس the calculation itself it's the same. Why? Because we will assume إنه beta is selling the goods at 25% markup on cost. So we will do the same calculation and we will assume the same income tax rate. So calculations up to this point are the same. However, change will assumption. The transaction is upstream. يعني beta is the seller and alpha is the buyer.
الادجستمنت بتصير بفيرست ستيب رايت وقت اللي كنا عم نعمل النت اسيتس ات اكوزيشن، ولا بميلة الان سي اي هيدي اخر ستيب عملناها؟
خلينا نفكر مع بعض. Why would you go and affect هذه الستيب اللي هي النت assets? Do you think that this will be affected? This calculates net assets of beta. Yes. at acquisition هذه it will not change.
ايه صح.
صح. Net assets of beta at reporting, these are the net assets. هلا اللي حضرتك تفضلتي فيه yes 100% correct. 100% correct. We have to affect the net assets of beta بس when at reporting هذه it will not change.
اوكي.
This will change.
at reporting.
وضحت الصورة؟ الآن بنعمل calculation. خليني let me push this down. sorry. برافو عليكي جزات. Why? Because this is upstream transaction. يعني who's making the profits? Who's earning the profits? It's beta. So this should affect the retained earnings of beta.
But I'm
So
confused
basically
why at reporting date. عم فكر ليش at reporting مش at، يعني أنا كنت رح أحطها بالacquisition وهي كانت غلطة.
ليش احنا اشتغلناها هون at reporting؟ طيب أنا بقول لك متى السيلز تمت؟ جزات. خلينا نقرأ. هلا بدنا نفترض بيتا supplies a component to alpha at a markup of so and so. On 30 September 2018 the inventories. إذا the problem is with the September 30 2018.
In case قالوا لي at acquisition date بعمل ال correction at acquisition صح؟
Definitely إذا قالوا لك which is rare وما أعتقد إنه it will serve the purpose.
Okay. So it's at report.
ليش it will not serve the purpose جوزيف؟ لأنه they want you to consolidate inventory. Consolidation will take place on September 30. If they want to have a problem with the inventory or unrealized profit, they will make it on September 30, 2018, not at acquisition. At acquisition, you do not do consolidation at acquisition. It will not appear. They will not see the effect, but they want to see the effect on the consolidation. That's why they will tell you to calculate this at the reporting date. Right. This is the reporting date. Capital, no change. احنا only change, sorry.
كلهم will remain the same.
صحيح. كلهم خليني let me copy them as is. هذا at reporting. اعمل له copy وهنا paste special اللي هو values. نفس الارقام لكن what will be to change here? I will insert a line. شو بكتب فيه؟ unrealized profit. شوف ال unrealized profit equals minus 2.4.
15 million.
So now we are talking about what?
I already calculated صح. مع الديفر
386,800. 386,800. طب change in net assets. How much now the change in net assets? Equals 386 minus at acquisition. What was the net assets at acquisition? 280. So we are talking about 106,800. كم كانت before that? Sorry. كم كانت before that? It was 109. لاحظة هلا الchange is 106. هلا بنكمل. Retained earnings will NCI they will change accordingly. Consolidated retained earnings. Retained earnings of Alpha at acquisition, the same. Alpha's share of change in net assets of Beta equals 75% times what, Josette, now?
10680 هيدي البدرة.
يا عيني عليكي. Alpha's share in goodwill impairment already هيها 7.5. Unrealized we don't have here because it is an upstream transaction. It's not a downstream transaction. So consolidated retained earnings, this is the amount. This will appear where? In the NCI here. It will affect the NCI. Initial measurement, we already measured that. Initial measurement. Okay. NCI share equals 25% times what? The 106. Impairment of goodwill. NCI's share is 2.5 million. And this is the NCI. Now it is 92.2 million. Does this make sense, Josette? معاي جوزيت؟ سمعتيني جوزيت ولا فصل عندك النت؟ أنا مش سامعك. إذا أنت بتحكي جوزيت I cannot hear you. هل في عندي مشكلة أنا بالمايك يعني؟ هلا سمعتك جوزيت. Let me write down in the chat box. Anyway, Josette, let's take a break. 15 minutes. مش عارف where is the problem. Maybe because I cannot hear you. I don't know if you can hear me. And I wrote a message in the chat box. Josette, just try to read the message and answer. Okay. I think you will rejoin. Can you hear me now, Josette?
ايه هاي دكتور سوري انا عندي مشكله بالكونكشن بتاع نحن
أتوقع.
بلبنان مشكلتنا.
توقعت ما في مشكلة جوزيت. Let us take a break, جوزيت. 15-minute break. بعدين we will come back to continue إن شاء الله.
ايه اوكي.
Okay.
هاي دكتور.
اهلا جوزيت، كيفك؟
الحمد لله نشكر الله. حكيتني كارول بتعتذر ما قدرت تفوت على الصف، عيد ميلاد بنتها اليوم، بتعتذر منك.
طيب بدنا كيك هيك يا جوزيت، احنا بدنا
ايه
كيك.
بدنا كيك على اثنين. عيد
الف
ميلاد
مبروك ان شاء الله.
بنتها وعيد سانتريتا، فعندها احتفالين.
ما في مشكله، ما في مشكله، ان شاء الله ان شاء الله العمر كله ان شاء الله. طيب في عندك
ميرسي.
اسئله جوزيت عن الامور اللي غطيناها؟ امورنا تمام؟
لا لهلا لا، كله تمام.
طيب خلينا نشوف هلا وان كيس، وانا شفتها كاني مره واحده في احد الاكزامز، اللي هي عباره عن sales of depreciable assets. يعني parent او subsidiary، يعني عندي I have intra group transaction that concerns a depreciable asset. Let's read. Alpha, a parent with a subsidiary, is preparing consolidated statements. On April 1st, 2020, Alpha acquired 80 million of the 100 million shares in Beta and gained control. On April 1st, 2020 and March 31st, 2024, the individual financial statements of Beta showed retained earnings of 40 and 100 million respectively. On March 31st, 2024, the individual financial statements of Alpha showed retained earnings of 700 million. Okay, the directors of Alpha carried out a fair value exercise. Plant and equipment having a carrying amount of 100 has a fair value of 140. So we have 40 million revaluation surplus, and this is gonna be depreciated over 10 years. Okay. Ignore income taxes, fine. On April 1st, 2023, Alpha purchased a machine which was to be used by Beta. The purchase price was 12 million. On that date, Alpha transferred the machine to Beta for an invoice price of 16 million. So they earned 4 million profit on sales of what? An asset, machine. Beta included the machine in its property, plant, and equipment and depreciated the machine over its useful life of 4 years with no residual value. But this is an intra-group transaction concerning Alpha selling a machine to Beta. Machine is subject to depreciation. So what's the impact on consolidation? First of all, Alpha recognized a profit of 4 million when they sold the machine to Beta. This profit should be eliminated. Why? Because this is unrealized profit. You cannot make a profit from an intra-group transaction because of the concept of one entity, one unit. So when you consolidate and consider parent and subsidiaries as one unit, so intercompany or intra-group transactions should be eliminated in full with the related profits earned by
هون
the
كمان
seller.
بنعمل adjustment in the net assets.
Yes, we
Same
have.
مثل
لكن لا, there is a different method to deal with this.
Okay.
ايش هي different method? You have to, let's go directly to the unrealized profit, how to calculate the unrealized profit. You have to create two scenarios, Josette. One scenario Alpha did not transfer the machine to Beta. And the present scenario, Alpha did transfer the machine to Beta. But when Alpha transferred the machine to Beta, for Alpha, cost of the machine to Alpha. What was the cost of a machine to Alpha? It was 12 million. Am I right? 12 million. They sold the machine to Beta for 16 million. So cost to Alpha, it's 12 million. This is the 12 million. Selling price by Alpha is what? 16 million. Profit recognized by alpha.
Doctor, what do we mean by alpha transfer the machine to beta؟ ما هي بeta بعتها اياها لالفا، الفا بقى ترجع ترد لها اياها؟
لا لحظة، هون شو بقول السؤال جوزيت. On April 1st Alpha purchased a machine، اشترت الماشين and then it should be used by whom? By Beta. That's why they purchase Alpha transfer the machine to Beta because they are going to use it, but they did not transfer the machine to Beta at cost. They transferred it at selling price, which is 16 million. This was the situation. So cost of the machine to Alpha, this is the purchase cost, 12 million. Selling price by Alpha is 16 million. So profit recognized by Alpha is 4 million. Are we okay so far?
Yes.
Right. This is for Alpha. This 16 million cost of the machine to Beta is what? 16 million. If you agree with me, Josette, right? طيب هلا خلينا نشوف بيتا شو بدها تعمل. بيتا will calculate depreciation expense. Depreciation expense by beta. How much? They say that the useful life of the machine is 4 years. So basically equals this divided by 4. So this is the depreciation expense by beta. Are we okay with this?
Yes.
طيب خلينا نشوف السيناريو that we have to create assuming that Alpha did not transfer the machine. طيب let me take this. Copy here. Cost of the machine to Alpha is 12 million. No selling, no transfer, so I will delete this. Alpha will depreciate. Depreciation expense by Alpha. How much is going to be the depreciation expense? Equals 12 million divided by 4, 3 million. Let's see what is the impact on the consolidation, Josette. If we assume that Alpha did not transfer the machine to Beta, the depreciation expense would be 3 million. But because Alpha transferred the machine to Beta, now the depreciation expense is what? 4 million. Are you following me, Josette?
Yes, yes.
طيب خليني
بس هيك
انا
عم
ارسم
حسها جديدة علي مشان هيك.
ايوه ما هي هذه الفكره فيها عشان let's say to capture الامباكت على الكونسوليديشن. Let me just delete ونقرب المسافات. Okay. So we have let me write down here difference او لا ما خلينا اسميه excess depreciation expense of what? Of 4 million minus 3 million equals 1 million. So this is the first impact on consolidation. When we consolidate the statement of financial position and the statement of comprehensive income, we have to put in mind, Josette, that there is excess depreciation recognized by the subsidiary, by Beta, by how much? 1 million. Because if we assume that this transaction did not take place and we are going to eliminate this transaction, Josette, so this excess depreciation should be eliminated from the consolidated financial statements. Do you agree with me?
Yes.
Thank you so much. So at the consolidated statement of comprehensive income, we have to eliminate 1 million of excess depreciation expense at the level of the statement of consolidated statement of financial position, we should eliminate the 1 million from the accumulated depreciation of the asset because we have excess accumulated depreciation of 1 million. طيب ممتاز. طب what else should we eliminate؟ دي
هيدي الديبريشيشن على أي ليفل نعملها؟ على مالة subsidiary or the parent؟
اوكي هلا who's depreciating the asset؟ It's
هلا
beta.
بيتا yes.
Beta is suffering the excess depreciation.
يعني ساعتها بدنا نعملها بالنت assets تبعها.
يا عيني عليك. طيب
أوكي
بالنسبة
خلص.
للprofit recognized by alpha, who's enjoying this profit? It is alpha, so we should
هي بدنا
eliminate.
نعملها adjustment بالretained earning. So
يا
عندنا
عيني
اثنين
عليك.
adjustment.
يعني
تقيل.
so the net adjustment should be what? We should eliminate 4 million profit. We should eliminate
retained
1
earning
million
eliminate
excess.
depreciation.
So net
Okay,
المفروض
clear.
يكون 3 million. Yes.
Yes, clear. Thank you.
And if you look at the numbers, شوف النت between 4 million Josette and 1
ايه
million
اصلا هي 1. ايه صحيح.
is the 3 million المفروض يكون ليش because we are consolidating, we are considering the two units as one unit, so you should end up with 3 million expense or 3 million item hitting the P&L. The net, this is the net. So two eliminations, excess خلينا نكتب هنا, this should be eliminated by beta, وهنا this should be eliminated, this should be eliminated by alpha. Are we okay with this, Josette?
Yes.
طيب. وطبعا we continue the same thing, we calculate the investment in subsidiary, we calculate
same بصيروا.
same thing. بس هنا الفكرة, I'm just trying to stress on the idea when there is a transfer of depreciable asset.
بس هول التو كيس اللي بيقطعوا عنا تقريبا بالانترا جروب يلي هن
ما شفت كيسز غير.
وهيدي.
ايه ما شفت كيسز. حتى this case maybe I have seen this one time only, maybe two times or maximum, or one time or two times maximum, but I didn't see often يعني showing or appearing in the exam. Last thing to close our session for today with is the disposal. So we are preparing ourselves to consolidate inshallah for during the next two classes, Josette. So next two classes it's only exercise. هلا هذه الكلاس we want to cover everything, you know, like theoretical exercises, calculation, etc. The last thing that I want to stress on is the disposal of subsidiary. If alpha disposed
what do we mean by
disposal يعني selling, في عندها كان subsidiary during the year, alpha sold the subsidiary.
Same.
Yes, disposal of a subsidiary. It's not disposal of asset or inventory. It's the disposal of the whole subsidiary. So what's the impact on the consolidation? What's the calculations that we have to follow? Let's go through this example. You are the financial controller of Gamma. You report to the financial director. One of your key roles is to prepare the draft consolidated financial statements for the year ended September 30. Okay, let's move on. On May 31st, 2025, Gamma disposed of its 75% holding in subsidiary A, not is in subsidiary A for 75 million. So they sold the subsidiary during the year because their year end is September 30. So during the year, they sold the subsidiary for $75 million. Okay. The shareholding in the subsidiary, Josette, is 75%. Gamma acquired these shares many years ago for cash consideration of 40 million. Subsidiary A operates in a market sector which is different from that of the rest of Gamma Group. Its disposal was the result of strategic decision by directors of Gamma that the group should withdraw from that particular sector. This is the justification. When Gamma purchased, they provide you with this justification because probably in the same question, Josette, they will ask you to comment on the non-current asset held for sale, because this is a disposal group. So you have to use your, like knowledge of IFRS 5, non-current assets held for sale and disposal groups, to comment on the disposal of this subsidiary. Anyway, here we have to focus on the disposal of subsidiary itself and the related calculations. When Gamma purchased the shares in subsidiary A, the net assets of subsidiary A had a fair value of 48 million. None of the assets and liabilities of subsidiary A, which were measured in initial fair value exercise undertaken at the date of subsidiary's acquisition, were included in the financial statements of subsidiary A during the year ended 30 September 2024. What does this mean? It means that they did the fair value exercise at acquisition, Josette. There were differences, there were revaluation surplus, but all of those disappeared until September 30, 2024. They were fully depreciated. They disappeared. If it was inventory, it was fully sold, and so on. This is what they are trying to say here. When Gamma acquired its controlling interest in subsidiary A, the directors elected to measure the non-controlling interest in subsidiary A at fair value of 13 million. No impairment of goodwill has arisen since acquisition. Right? On October 1st, 2024, the net assets of subsidiary A had a total carrying amount of 62 million. During the year ended September 30, 2025, subsidiary A made a post-tax profit of 6.6. The profit accrued evenly. Why they say evenly? Because they want you to divide this by 12 in order to calculate the monthly profit. This is the meaning of evenly. Subsidiary A had no other comprehensive income. Subsidiary A paid dividends of 3.6 million on March 31st, 2025. This was the only dividend paid by subsidiary A during the year ended September 30, 2025. Gamma incurred income tax liability of 7 million on the disposal of subsidiary A. Type requirement. Explain how Gamma would account for disposal of subsidiary A in its consolidated statements for the year ended September 30, 2025. When did the sale take place? May 31st, 2025. طيب شوفي Josette, in order to work out this example or similar examples or exercises or questions in the exam, you have to go through steps. Because according to IFRS 10, there are 4 steps that the entity should go through when they recognize the disposal of subsidiary. So we will follow those steps in IFRS 10. Step number 1, de-recognize. If a parent loses control of subsidiary, the parent de-recognize. De-recognize what? The assets and liabilities of subsidiary at their carrying amounts at the date when control is lost. This is the rule. At the date of disposal, the parent should de-recognize the assets and liabilities of the subsidiary. Right. Let's check the net assets of the subsidiary, assets and liabilities, on May 31st, 2025, which is the date of what? Disposal. Right.
Date of disposal.
Net assets at the beginning of the year. According to the question, it's 62 million. They said the net assets of A amount 62 million. Where did we read that? You see here? On October 1st, 2024, at the beginning of the year, net assets of A, the amount was 62 million. So they provided us with this number. So we'll take the net assets of the subsidiary at the beginning of the year. We will add to it. What I'm trying to calculate, Josette, the net assets of the subsidiary at the date of disposal, which is May 31st. So that's why I will start with the net assets at the beginning of the year, and I should add profit minus dividends. Profit minus dividends to reach to the equity at the date of disposal. So profits made by the subsidiary up to the date of disposal. Remember, the profit for the year is 6.6. 2. The date of disposal, we are talking about 8 months. From October 2024 to May 31st, 2025, we are talking about 8 months. So 8 over 12 times 6.6, we are talking about 4.4 million of profit that belongs to whom? To the subsidiary before selling it. To the subsidiary. Okay, so 4.4. So again, we have to deduct what? Dividends paid by the subsidiary. When did they pay the dividends? March 31st, 2025. So before disposal, they paid the dividends of 3.6 million. Do we have any undepreciated fair value adjustments so far? According to the information given, we have zero. Why zero, ya Ayman? Because they told us. You see here, none of the assets and liabilities of subsidiary which were measured in initial fair value exercise undertaken at the date of acquisition were included. So all of those assets and liabilities, they are fully depreciated or they are not appearing anymore. So basically, any fair value adjustment should have a value of what? Zero. So basically, net assets plus profits to date of disposal, minus dividends, plus any fair value adjustments, which in our case is zero. So the net assets of the subsidiary at disposal date is 62.8. But can I calculate the change in net assets of subsidiary? Yes. At the end of the year or at the disposal date, it was 62 million point 8. طيب, at the 48 million, from where did we get the 48 million? If you go back, where did they, you see here, when Gamma purchased the shares in subsidiary A, the net assets of subsidiary had a fair value of 48 million. So net assets of subsidiary at acquisition date is 48 million. So the usual calculation, the usual difference, as we used to do, Josette, nothing new so far. So we take the net assets at disposal date minus the net assets at acquisition date, and this is the change in net assets of subsidiary since when? Since acquisition. Are we okay so far? This is step number 1.
Okay.
Tamam. Move on. Still we are in step number 1. Now the carrying amount of unimpaired goodwill. Because we know sometimes there is goodwill, and goodwill is subject to amortization, and by the end of the year or at the reporting date or at the disposal date, there may be unimpaired balance of goodwill. So let's work this out. How to calculate goodwill in the first place? Consideration paid by Gamma, 40 million. How did I know? They already said that. You see here, Gamma acquired the shares for a cash consideration of what? 40 million. So consideration paid by Gamma at acquisition date was 40 million. Initial measurement of non-controlling interest. What did they say about non-controlling interest, Josette? Let's follow the example. Where did they mention? Yes, here is the, when Gamma acquired its controlling interest in the subsidiary, the directors measured the non-controlling interest at fair value, which was 13 million. Huh? So basically, consideration paid. I'm trying to say here, Josette, I am following the same flow. I'm not adding anything.
هلا كل الداتا هن عطينا اياها it's given, بس نحن بدنا نحطهم بالستابس.
يا عيني عليكي. Consideration paid.
هلا.
Yes, consideration paid by Gamma 40 million. Initial measurement of NCI 13. Total is fair value of net assets of subsidiary A is if you add this to this minus the fair value of net assets, which is 48 million given. So we have initial measurement of goodwill of $5 million. This is the initial measurement. This is the goodwill at acquisition. Same way we used to calculate. Is there any impairment? According to the question, there is zero impairment. So goodwill Date of disposal equals 5 million. This is the unimpaired goodwill. So far I did the following. Number one, I calculated the net assets of the subsidiary at disposal date. Number two, I calculated the remaining balance of goodwill, the unimpaired balance of goodwill at disposal date as well. This is how I calculated this. Let's move to the next step. 3, the carrying amount of any non-controlling interest in the former subsidiary at the date when control is lost. Let's calculate the carrying amount of non-controlling interest at the date of disposal. Initial measurement. Remember 13 million. It was given to us. Add non-controlling interest share of change in the net assets of the subsidiary. I already calculated the change in net assets. 14.8 million. What's the non-controlling share? Gamma disposed of its 75% holding in subsidiary. So the non-controlling interest share is 25%. So I will multiply 25% times 14.8. This is the 14.8, Josette. 14.8.
Yes.
Equals what? Equals 3.7. So initial measurement of non-controlling interest, 13 million. Their share of changes in net assets of subsidiary at 3.7. Other comprehensive income attributable to non-controlling interest, none. They did not provide us with anything. So this is the carrying amount of non-controlling interest at the date of what? At the date of disposal. At the date of disposal. Time. Let's move on now. Recognize. خلصنا. We are done with step number A, which was de-recognized. Now recognize the fair value of consideration received and any investment retained in the former subsidiary. هلا, in the Diploma IFRS exams, all the questions concern full disposal of subsidiary, not partial. هلا, partial, it has its own complications, which they do not want us to go through with. So in the exam questions, all the questions related to disposal of subsidiary, they concern full disposal of subsidiary, Josette, not partial.
Okay.
Because in real life, it could be partial disposal. يعني you dispose of 5% of the subsidiary, for example, or 10% of the subsidiary. For exam purposes, no, it's full disposal. So basically, fair value of consideration received, they sold the subsidiary for 75 million. Any investment retained? Zero. We don't have any investment retained. So basically, the fair value of consideration received when the subsidiary was sold is only 75 million. Step number 3, or C, reclassify the profit or loss or transfer to retained earnings. Let's see how we do this. Other comprehensive income to be reclassified to profit or loss, we don't have any in our example. They did not mention any. What do they mean by this? If you remember, Josette, sometimes the subsidiary may have other components of equity, like revaluation surplus, like actuarial loss or gain, the OCI, I mean. So do we need to transfer any OCI items in the subsidiary to the retained earnings? We don't have items in the subsidiary to be retransferred, reclassified. So basically, this is, in all exam questions, it is zero. Last step, let's calculate the gain or loss from disposal. Gain or loss from the disposal of subsidiary. Remember, we sold the subsidiary for 75 million, Josette. Let's deduct carrying amount of investment in subsidiary A. 62.8. How did we measure this? This is the measurement. Where is the 62.8? This is the 62.8. You see? Net assets of subsidiary at date of disposal. So 75 million cash in minus carrying amount of investment in subsidiary A, 62.8, the net assets of subsidiary A. Deduct unimpaired goodwill, we have 5 million. Add carrying amount of non-controlling interest, 16.7. Deduct any income tax payable. According to the question, they incurred 7 million income tax liability or payable. So this is the gain on disposal at consolidation level. This is the gain that will appear in the consolidated retained earnings, 16.9. If you have a question, please ask me. You have to follow the steps, Josette. This is a simple calculation of what? Gain or loss from disposal. هلا ممكن تسأليني
بالعادة بتيجي كثير هاي the recognition
لا
ولا
I think we have four times. It appeared 4 times.
Okay.
Maybe. شكلك we want to skip جوزيت من سؤالك.
لا بالعكس صعبتها ولقيتها جديدة مشان هيك.
ايوه الفكرة جديدة. هي ببساطة شوفي جوزيت، هو هذا التشالنج هنا. Before that it's easy. يعني we calculated the net assets, we calculated change in net assets, we calculated the goodwill as we used to do. Here we calculated
four steps.
Yes, in NCI برضو ما فيها قصة. هذه you can skip حتى لو انت you are not familiar with this, because they did not, in all questions in the past exams, they did not mention anything about reclassification. So this step, how to calculate gain on or loss on consolidation. شوفي كيف بفكر فيها. If you want to dispose of the subsidiary, فكري فيها جوزيت معي. If I want to dispose of or de-recognize the subsidiary, I will credit the debit balances and I will debit the credit balances. This is how you dispose. This is how you de-recognize. طيب, sales proceeds, this is a debit because you received the cash. Carrying amount of investment, in order to de-recognize the carrying amount of the investment, you have to credit investment in subsidiary. So we will be crediting the investment in subsidiary. But how did I calculate this amount? It's the net assets. Investment in subsidiary is the net assets of the subsidiary, 62.8. So I have to credit this because it was debit. Now it has a credit value of 62 million. It will become 0. Right. What about the goodwill? Remember, the goodwill in the consolidation is a debit balance. It's an asset. In order to de-recognize, so it will disappear, I have to credit by 5 million. Right. What about the non-controlling interest? Remember, the non-controlling interest in the consolidation, it's a credit balance. It's part of the equity. In order to make it 0, de-recognize, I have to debit the balance by 16.7. I already calculated this. Right. They said that we paid income taxes, we paid 7 million. So it's a debit amount because it's an expense. So if you take the debit minus the credit, you will end up with gain on disposal by 16.9 million. This is at the consolidation level.
Okay.
Are we clear about this? Right. هلا Josette, this is at the consolidation level. Why I say consolidation level? Because goodwill appears in the consolidation. Non-controlling interest appears in the consolidation. If you want to remove the effect of subsidiary from the consolidation, you have to debit and credit those accounts. And this is the result. Gain on disposal of 16. طيب, remember, the parent, Josette, they have their own individual financial statements, صح? طيب, in the parents' individual financial statements, they have only one account called what? Investment in subsidiary. You remember? Yeah, when we used to post those entries, لحظة, investment in beta. So they have only one account called investment in beta in their individual financial statement. So let's do the calculation of profit or loss at the individual financial statements of the parent. شوفي هالخطوة جوزيت. Pre-tax gain on disposal at Gamma's individual financial statement levels. طيب كيف عرفت هذا الرقم? How did I determine this? Investment in subsidiary is carried at 40 million. How did I know? The balance of investments in subsidiary is 40 million. If you go back to the question, Josette, you'll find out what? Gamma paid a cash consideration of what? 40 million to acquire beta. We always said, this 40 million will stay as is. It will not change. So In Gamma's individual financial statements, there is an account called investment in subsidiary, and it has a balance of 40 million since 5 years ago, or 6 years, or 10 years ago. It's 40 million. So basically, this investment was sold for how much? For 75 million. So we are talking about $35 million gain on disposal of subsidiary in what? In Gamma's individual financial statements. They paid tax 7 million on this profit, so profit after tax in their individual financial statements without consolidation equals 28. Equals 28. طب how much did I calculate? At consolidation level, it's 16.9. At individual financial statement level, it's 28. But what is the difference between 28 and 16.9? It's 11.1. But what is this difference? This difference is Gamma's share of changes in net assets of the subsidiary, less goodwill impairment. يعني يا جوزيف, if we took this number, if you remember, this number, multiply it by parents' share. What was the parents' share? 75%. If you multiply this by 75%, you should end up with 11.1, which is the difference between the gain at individual financial statements level and the gain that you already calculated at the consolidation level. Is this true? Yes. 75% times 14.8, it's 11.1. هلا هون I'm trying to say what, Josette? This is a reconciliation. To make sure that your calculation is fine, you have to end up with this difference, same difference.
Validation.
تعرفي حالك حليتي صح. Otherwise, there is a problem with your calculation. If you did not reach to this conclusion, there is problem with your calculations here. Okay. The difference between gain or loss at individual financial statement level and gain or loss at consolidation level should equal what? Should equal parents' share in subsidiaries net assets, the change in subsidiaries net assets minus any goodwill impairment, if there is any goodwill impairment. So if we reach to the same number, we conclude that the calculations above are okay, and this is the gain or loss that should appear in the consolidated financial statement. Make sense?
Yes.
And I know this is so new for you. Challenging. So you have to go through it carefully, read, and I added here notes. You see here conclusion, linked everything. This is also required in the exam. Presentation of gain or loss from disposal of subsidiary. This is what I was talking about, Josette. When you dispose of a subsidiary, you have something so-called disposal group. So you have to apply the principles in IFRS 5, if you remember, Josette. IFRS 5 talks about non-current assets held for sale and discontinued operations. طيب يا جماعة, according to IFRS 5, any gain or loss related to the disposal group should be separated, should appear separately in the statement of comprehensive income. But how much profit should appear separately? This profit is comprised of two things. One, 4.4, which is the profit of subsidiary until the day of disposal. Remember, 6.6 million times 8 over 12. So this is the first item of profit from disposal. Number two, it's the gain on disposal itself. We already calculated this, 16.9. We don't have fair value adjustments. So in the comprehensive statement, in the consolidated statement of comprehensive income, there should be a separate line item, Josette, called gain from discontinued operation, and the amount is 21 million. هذا should be split, should be separated from the profit or loss for the year. ليه? Because we are applying the rules of IFRS 5.
Okay.
تمام. بجوز انت شوي ناسي, maybe يعني you forget a little bit about IFRS 5, non-current assets held for sale, but the examiners, they want to see إنه you know how to split the income and how to determine the profit or loss from discontinued operation. And the
إيه
explanation,
مظبوط.
full explanation is here underneath. تمام. Any question
أوكي.
جوزيت؟
لا هيدا بدنا نرجع نمرق عليه كتير هيك carefully حتى نرجع
كل
نستوعبه.
الاكزام question they follow the same flow.
إيه.
يعني إذا أنت فهمتي هذه الطريقة بالاحتساب you go through it carefully they follow the same because basically we have to follow those steps. شايف A, B, C and D هدول steps given to us by IFRS 10. So we have to follow the standard بحذافيره. لكن أنا I tried to include some tables, some calculations to make life easy.
اوكي في شيء غير بعد topics بعد we didn't cover it yet.
آخر شغلة بس just to put you in the picture investment in associate. كثير شغلة سهلة وبسيطة. خلينا بس نكتب النوتس عنها ونفهم ايش هي. مين هي الاسوسيت؟ Who's the associate جوزيت حسب معلوماتك based on your knowledge؟
هي entity we acquire فيها shares between 20 or 50% and we have significant influence فيها بس ما عندنا control عليها.
Between 20 and 50% shareholding شو دائما بنحكي احنا جوزيت؟
significant influence no control.
Significant influence is presumed. كثير مهمة هاي significant influence is presumed presumed بدي اكتبها انا بالبولد. Don't say انه as long as I have a shareholding between 20 and 50%, this is my associate. No, this is totally wrong, Joseph. Between 20 and 50%, you may have significant influence until the time we are sure that you have the significant influence. We have to go into the substance. We have to ensure that there is significant influence. Why? Because some companies, they have a shareholding of 40% in other companies, but they do not have significant influence. So the other company cannot be an associate. Associate links with significant influence, regardless of the percentage of shareholding, even if it is above 20% or even below 20% or above 50%. So it's the significant influence. But once there is significant influence, when significant influence exists, then what? في عندي علاقة بين investor, there is a relation between investor and associate. ممتاز. Accounting. Use equity method. Sometimes they call it mirror accounting عشان يسهل علينا ونفهم equity method. Sometimes they call it mirror accounting. كيف يعني mirror accounting? What happens in the equity of the associate reflects on the financial statements of the investor. So if, example, investor acquired 40% of investee and gained significant influence. Investor paid 100,000 cash consideration. So basically, the entry is as follows. Debit, investment in associate, credit, cash. 100,000. Let me copy any number here, put it here. Okay. هلا associate earned profit of 60,000. So they made $60,000 profit. What should the investor do? Remember, 60,000 will increase their equity, Josette. I own 40% of their equity. So any increase in the equity, I have to recognize. So investor recognizes their share of the associates profit. So basically the entry is as follows: debit investment in associate, credit profit or income from associate. And this will hit what? P&L. By how much? Equals 60,000 times their share, 40%. Okay. But what if associate recognized a loss, not a profit? Associate recognized a loss or made a loss of, say, 50,000.
كمان.
Same thing, investor recognizes their share of the associates loss. بس الانتري would be debit loss from associate, and it will hit the P&L, credit investment in associate by their share, which equals 40% times 50,000. طيب, what if associate distributed dividends? Distributed dividends of, say, $20,000. So the investor, they have to recognize their share of associates' dividends. What would be the entry? Debit dividends receivable. Credit investment in associate. Why did we credit investment in associate here, Josette?
Because it's a loss.
When they distributed dividends, Josette, what happened with their equity? When the associate distributed dividends, what will happen with their equity there? It will go down. صح?
Yes.
When they pay dividends, يعني retained earnings will decline, will go down, so the equity of the associate will go down. Remember, you own 40% of their equity. So if their equity is declining, your investment should be declining. Mirror accounting. If their equity is increasing, your investment will be increasing. This is the proof, Josette. The profit will increase their equity, so your investment increased. The loss will decrease the equity within the associate, so your investment will decrease. The dividends will decrease the equity in the associate, so your investment will go down as well. The last situation, when the associate, let's assume that the associate recognized a revaluation surplus, which is the OCI, of how much? Let's assume $10,000. The investor should recognize what? Their share of the associates OCI. Mirror accounting. What happened there reflects in the financial statements of the investor. So what would be the entry? Again, ask yourself, Josette, revaluation surplus with the associate. What's the impact on their equity? Increase or decrease? When the associate recognizes revaluation surplus in their equity.
Increase.
Increase. So my investment will increase. So basically,
Yes.
as an investor, I will debit investment in associate by my share equals 40%. 40% times 10,000. So I will recognize my share of their OCI. But remember here, be careful. Here, you cannot credit P&L. You will say, not income from associate, OCI related to the associate. OCI, associate, and it is part of the equity. Yes, it will go to the equity, not to the P&L. Because there it is equity. Always remember, Josette, mirror accounting. They recognize it there as revaluation surplus in their equity. It will reflect as revaluation surplus in my equity, and my investment will increase accordingly. Last thing about associate, remember the inter-company transactions. What is the golden rule here? I don't care about the direction, Josette. I don't care about direction, whether it is downstream or upstream. I don't care.
Okay.
The important thing إنه eliminate the investors' share of the unrealized profit. So in the consolidation, we were eliminating the unrealized profit in full. When it is an associate, Josette, we eliminate the investor's share only, يعني 40%. Why? Because 60% belongs to the associate owners other than the investor. Remember always, in the associate and joint venture, we do not consolidate.
Yes.
They are not subject to consolidation. So the idea of full elimination is not applicable. So if there is intercompany transaction and there is unrealized profit, only eliminate the investor's share. In our example, the 40%. And keep the 60% as is. It's realized, not unrealized. These are the rules of the investment in associate. Any question, Josette?
لا, so far
Does
لا.
this make sense? Are we okay? Are we happy with what
Yes,
we covered so far?
Yes.
So next time, inshallah, Josette, we will go through the past exam questions, the consolidation, the group accounting questions, and we will work out as many as we can. إن شاء الله نقدر نغطي 6 7 8 10 ما عندي مشكلة. We will utilize the time to cover as much as we can.
إن شاء الله. هلا الانفستمنت ان اسوسييت بيجوا اكسرسايز لحالهم ولا مع الكونسوليديشن هيك ابارت
مع
فيها؟
الكونسوليديشن بيجيبوا لك واحدة من بيجيبوا سبسيدري بيتا مثلا وبيجيبوا ايش associate gamma, but we do not consolidate gamma. اللهم we need to eliminate the intercompany unrealized profit, the share of the investor, if there was gain income or loss from the associate.
بتصير بريتيند
يا
ايرنينجز
عيني عليك. يعني هنا شفتي هنا بقول لك مثلا الاسوسيت they recognized loss ولا they recognized gain, but it's not yet booked by Alpha. So we need to book it this way. We increase or decrease the retained earnings of Alpha. But consolidation, no consolidation. And we will cover this in our exercises, inshallah.
اوكي. سو يعني هيك ميلي نحن بنكون we covered كل شيء topics بيجوا بقلب الكونسوليديشن.
ما في شيء خاطر في بالي ما غطيناه. We talked about everything related to group accounting. هلا الباقي علينا just to exercise.
اوكي
apply كل الكونسبتس اللي احنا درسناها، وراح انت تشوف you will discover جوزيت ان شاء الله and the rest of you that once we go through the past exam questions you will feel yourself that you are in control because we are applying everything that you know on the paper. This is what we will do ان شاء الله. I will be using Excel sheets, يعني I will copy the question on the Excel and we will work it out together.
اوكي
Okay. طيب.
this
Thank you so
Excel
much.
مثل العادة رح تبعت لنا اياه لماريا صح؟
طبعا
رح
من
نرجع
عيوني ببعته ولا يهمك، على عيني.
Thank you.
بس انا
Thank
باخذ
you, thank you.
$10 على كل مره ببعته جوزيف.
تكرم عينك 20
طيب خلاص موافق. اوكي
Thank you.
اذا انا I wish you all the best ان شاء الله. See you next week with more and more exercises. Take care and try to enjoy the rest
دكتور
of this
أيمن
year.
thank you for your time دكتور أيمن. Thank you.
العفو بأمرك، الله يعطيك العافية.
باي باي.
باي باي.